Hey, everybody, welcome back to another episode of the Alternative Investor Mastermind. Got a great guest for you all today, Tom Laune from Bulletproof Wealth. Tom, thanks for being on the show.
Thanks for having me, Jack. I'm really excited to be here today.
Yeah, it's great to have you, and we've got the privilege to spend some time together at a couple mastermind events. So I've enjoyed getting to know you, and I think our audience is really going to appreciate hearing your story and what you do in in the overall real estate and financial business. So if you would, kind
Sure.
of just tell us a little bit about yourself and your background.
Absolutely, Jack. So I started, believe it or not, as a professional in the music industry. And I did that, for 29 years. And I got to work with a bunch of great bands. And 10 years ago, I got out of that completely. So it's kind of interesting story as to how I got out of that and what is going on. But I had a partial hearing loss. And of course, in the music business, you can't really function if you can't hear well. That's really my main job, was a recording engineer, mix engineer, and producer. And like I said, working on a really high level artists like REM, Bruce Springsteen, just hundreds of really good artists. But I all of a sudden was not able to keep doing that job because I couldn't hear. So couldn't hear properly out of one ear. And that's all that you're doing, is you're making a living on hearing. And I was the guy doing all the mixing of the records and everything. So crazy. But while I was I have a wild story I'd love to share with you about being in the music industry. So I remember my doorbell ringing one afternoon when I was in the music business. And when I opened it, I was so surprised to see my own personal financial advisor standing there. And he had this like really bad, troubled look on his face. And I invited him in. And I was like, okay, what in the world is going on? And honestly, I just began to feel sick in the pit of my stomach as he unraveled this crazy story of how he had lied to me and used my money for his own financial gain. And honestly, Jack, it was just quite a scene, because this ended with him crying and he begging me not to turn him into the authorities. So I thought, this cannot be happening again, because this wasn't the first or the second time this had happened before. This was over 29 years in the music business. I had 3 out of 4 financial advisors that turned out to be fraudulent, and 2 of the 3 of them ended up in jail. Okay. That third guy should have went to jail as well. I didn't realize it, but I was in an industry that was preyed on by financial people trying to take advantage of, less sophisticated. Probably doesn't happen as much in the real estate business. I don't know, but in music and in sports, it's pretty rampant. And unfortunately, my story is not unique, because there's a lot of you guys out there listening that have had a trusted financial professional abuse that trust. But what I did, that's kind of my why. I decided to do something about this 10 years ago, and I made a career change from the music business into the financial business. And I wanted to be one of the guys who actually told people the real deal and was straight up with people. And I heard a podcast, Jack, about saving money in life insurance to use like a bank. And like many of your listeners, I'm sure, I thought, if this is so great, why isn't everybody doing it? What is going on with this? And I thought it might be another scam. So I started researching it because I was super intrigued about it. And I read all kinds of books, went to conferences, tried it. I ended up trying it myself. And not only did it work, Jack, but it way, way exceeded my expectations. So that's when I decided to go back to school. I spent 4 years, got 3 financial designations. So I'm a chartered financial consultant, a chartered life underwriter, and a chartered special needs consultant. And I did all of that so I could help others not spend the time that I did and the money that I did to have to go through and learn all of this. Because believe me, it is not taught in traditional education, which I've been through all of it for the financial services business. They don't teach about saving money in life insurance. So that's kind of how I got into doing this. Does that make sense?
Yeah. I'd like to say it's a great story. Well, it is a great story, but it's also a challenging story, and but it really
Yeah.
does explain your why after living through some of those challenges. And you're obviously very well positioned to do a better job because of it. And
Yes.
yeah, one of the things I like about our conversations, and this podcast is called the Alternative Investor Mastermind, is
Yeah.
I've never been a big fan of sort of the traditional mainstream stocks, bonds, index fund type of investing. I think it's a fit for certain people, but I've always found better returns through real estate, through niche type opportunities, and through
Yes.
just other interesting angles. And especially the wealthy tend to take advantage of a lot of these opportunities that the average investor who's just putting money into a mutual fund in a 401k doesn't think of. And one of the key terms is infinite banking, which I know is a buzzword, but if you could maybe just
Yeah.
explain what your thoughts are on infinite banking and the types of things you do for our listener base, which is largely more active real estate investors, or just more savvy high net worth investors looking for better than average opportunities.
Absolutely, Jack. Well, my strategy that I have trademarked is called Bulletproof Wealth. And one of the elements that it incorporates is infinite banking. I really kind of distance myself a little bit from that term because it's so very, very narrow in focus. And I take a much more holistic approach when working with my clients. And I have a lot more financial education designations and background than the traditional infinite banking person. So I definitely understand it. I've been an authorized infinite banking practitioner since the program began back in 2013, I think is when I went through that program. And I love helping people understand how it works, but I will give you the basics of it. So what it is, it's an alternative place to store capital, not an investment. It's an alternative place to store capital to saving in a traditional bank, right? So it's just another place to save money while you're waiting for an investment opportunity to come along. So that is the key differentiator. It's not trying to make you uber wealthy. It's just giving you a great place that honestly you can earn money through dividends while you're waiting for that really great opportunity to come along. And then when your investment opportunity comes along that you want to do, you don't actually pull money out of this place, right? You don't pull money out of a life insurance policy. You borrow against it using collateralization, just like a home equity line of credit. So the way that I really try to help people understand this is that it's super similar to a home equity line of credit. And most people know how that financial instrument works. And how mine, saving money in life insurance differs is that the credit amount increases every year. So with a home equity line of credit, it's fixed every year. With a life insurance line of credit, it increases every year. And obviously the equity in your house is the collateral. With life insurance, the cash value is the collateral. So the cash value is the equity in the policy. And banks absolutely love this as equity. It could not be any stronger equity than the cash value in life insurance, specifically whole life insurance. Actually, they don't like universal or index universal life because it has just doesn't have the same collateral capacity as whole life. But the big thing is that with a home equity line of credit, you may or may not realize this, but when you take a loan against a financial instrument like that, it impacts your credit score because it's reported to the credit reporting agency. And with a life insurance line of credit, there's zero impact to your credit score. And also, of course, your home equity line of credit doesn't earn you any money, but with a life insurance line of credit, it grows every year through dividends, which is a return of profit of the company. So obviously your home equity line of credit can go down and they can pull it back if your home value decreases, but your life insurance line of credit just goes up every year no matter what. So those are some of the most similar financial product is a home equity line of credit, and that's some of the differences. I do this myself, Jack, and I do it at a very high level. I have 9 whole life policies. And I try to funnel as much of my own personal income as possible into my policies. And then when someone like you comes along with a great investment idea, that's where I just take a loan against those policies to put into the investment. And it really is an amazing thing to still be earning dividends and to be over here investing at the same time.
That,
Does that make
that
sense?
yeah, it does. That's great. Inflation is very much in the news
Yeah.
recently. How does that affect the strategy for someone like you who already has these, and how does that affect how you might look at someone who's just starting one now with
Well,
potential for higher interest rates?
sure. Well, I can tell you right now that the higher the interest rates go on prime, the more that ultimately dividends are going to go because they utilize vehicles that are been very difficult in a low interest rate environment. So I think they're going to be paying out more dividends as the years roll on here in this newer higher interest rate environment. And the other thing is that you know you have to have dry powder in order to be able to make an investment when it comes along. And you're definitely, the Fed just did a print today, July 13th, 2023 is when we're right now. And it was 9.1%. So not good. That means that inflation came in higher than expected. That is not good because that means that the Federal Reserve is probably going to do another rate hike to try to curb inflation. And we really don't want to have our money sitting in a traditional bank earning nothing in interest or next to nothing in interest because you're actually then losing purchasing power just by leaving it there. So the bottom line is having money inside of a life insurance policy helps mitigate that inflation risk because you're also, while you're waiting for an investment opportunity, you're also earning money as well. Does that make sense?
Absolutely, absolutely. What are I know some people will use this as somewhat of an alternative to an IRA as well because I believe there's some tax deferred growth. Can you talk a little bit about taxes and tax benefits for
Absolutely.
those that are in the higher brackets?
So this is obviously if you are looking at doing a Roth-like structure, you get phased out at a certain income level, and that income level is around somewhere around 185 to $190,000 a year. When you make more than that, then the only way to access a Roth is through backdoor mechanisms, and it is not easy to accomplish all of that. And normally, people who are putting money into Roth accounts fall into that less than $190,000 category, and you can't get much in them, right? $6,500 a year or something like that. So with this structure for taxes, it is very, very, very advantageous. It's really, other than a Roth account, the only thing that you can have a really clear path to pulling out money tax-free in retirement. And the way it works is that you put in after-tax dollars. It grows tax deferred or not really deferred, it's tax advantaged is what I say. And then in retirement, you pull it out tax free if you do it correctly. Now, the reason I have to put that caveat on it is because you're going to have a ton of capital gains. I mean, a lot of capital gains inside these policies, and you can't take the gain out. What happens is you distribute the basis out or all the money you put in, and that comes out tax-free. And then when you hit your gain that is in the policy, then you take collateralized loans that you never pay back. So you end up building up this huge, ginormous loan balance in retirement that gets paid off by the death benefit, and then the balance of the death benefit goes to your beneficiary. So it's actually amazing the way this works. And they call it first in, first out taxation, which obviously normal investments are last in, first out. So if you had $100,000, say, of Apple stock, and then it grew to 200,000, if you pulled out 100,000, they would consider that all the last money coming out would be the gains. So you'd be taxed on that money. But with life insurance, if you have 100,000 basis and it grows to 200,000, when you pull the 100,000 out, they consider that your basis or your first money in. So first in, first out. So that's kind of it's huge really in the end. It's a massive tax advantage.
Yeah, and if or when you do unfortunately eventually pass away, as we all do, is it typically
Yep.
transferred tax free as far as estate
Absolutely.
planning
Oh,
issues?
yeah. For estate planning issues, the death benefit is always tax free. So that's the beauty of this. If you have a huge loan balance, then that gets paid off and the balance goes tax-free to your heirs. If not, then if you don't have a loan balance, let's say you decided you didn't need the money in retirement and you just let the life insurance grow, then you're going to still pass on the death benefit tax-free. So it has huge amount of tax advantages, and I don't see them changing anytime soon because there's just not enough money overall in these types of policies that I do that it would make a huge impact if there was a tax law change regarding that. It's just not low-hanging fruit, if that makes sense. I think they're way more likely to come after 401ks or something if they're needing more money than they would on the cash value of life insurance.
Yeah, I definitely agree with you there. I know we had some scares with the IRA programs this past year. I think a headline about Peter Thiel, and then all of a sudden Congress was almost going to change the rules just because of
yes.
One guy with a few $1 billion in his IRA.
I know, craziness. That was crazy.
Yeah. What are your thoughts? Again, I know none of us can predict the future, but what are your thoughts on the overall economy with you mentioned rates going up, and we've been in a 14 plus year upswing minus the 3-month scare during the beginning of COVID.
Well, listen, Jack, I don't have a crystal ball. Okay. I don't know what's going to happen for sure. And honestly, it's hanged on a lot longer than I thought before we've had another serious recession. But I do not see, with all of the monetary policy of just printing money hand over fist during the COVID years, that they are not going to, this isn't eventually going to have a bad outcome. It's just, you cannot print that much money without having inflation. So really, I would like to take a minute and define inflation, because there's a lot of people that say out there that inflation is rising prices, but that's, to me, just a side effect of what inflation is, which is an expansion of the money supply. So if you have more money chasing the same amount of goods and services, there's no way that those goods and services aren't going to have to go up to somehow equalize with this massive amount of new dollars being printed, right? That is what's happening right now. I don't think this whole situation in the Ukraine is the cause of the gas increase. I think it's the massive amount of monetary inflation that happened, and it has been happening for the last several years, that is causing the prices to have to try to equalize and catch up to the amount of new money that's in circulation.
Completely agree there. But the Russia-Ukraine thing is only making things move a little bit faster with less exports of wheat, less exports of oil and gas. So yeah, we'll see how it plays out. Like you said, neither of us have a crystal ball.
Yeah.
What are some key questions you'll ask a potential client of yours? Like, who do you look for in potential people to work with, and what are some tips or some key questions you typically like to ask as you're getting to know them?
Yeah. So, Jack, the only thing that they have to do to be able to work with me is they have to be moderately healthy, right? Because getting qualified for life insurance is literally based on your health, right? You have to go through a somewhat of a health, questionnaire. And the second thing is the amount of life insurance that someone can qualify to own is based on their income and their age. There's a correlation where the older you get, the less life insurance you can buy. So as a young person, you can buy quite a bit relative to your income, but then it kind of reverses as you get older, and the older you get, the less you can buy. And because what they're ultimately trying to do is replace income, and they do this on a 4% income replacement ratio, which means for every $1 million of life insurance you have, you're replacing about $40,000 of income. So for example, $5 million of life insurance replaces about $200,000 of income from a life insurance company's perspective. So that is really the question I ask is, what is your income? How old are you? And how healthy are you? And obviously, this really only works for U.S. citizens, because everything I do is based in the U.S. With U.S. life insurance companies. So U.S. citizens is another key qualifier. And I typically work with people who kind of are phasing out of being able to do Roths in the 200K plus income range, and I can really go through all of their financial situation. Anybody listening, I can go through your financial situation and help determine if this is a good fit, right? Sometimes it just is an unbelievably good fit, and other times it just doesn't make sense due to a health constraint or some other reason why it's just not feasible to be able to get the product. But again, it's not traditional whole life insurance. Okay. That's the thing I need to emphasize. It's specially designed, and normal whole life insurance has no cash value at all for the first several years. And this, you have an immediate large amount of cash value that you can collateralize with and get a loan within 30 days. So it's not a long period of being without your capital. It's a short period to be able to get this loan, to be able to invest in what you wanted to invest in.
Tom, I'm really glad you said that, because I know that's the one thing I always think of. That's the first risk I think of on anything in the life insurance realm. Is just that usually the first year or two is commission only, and that there's no cash value for a number of years. So that's pretty amazing.
And thank you for mentioning that, Jack, because I designed these things to put in as much money possible for the least amount of life insurance, so that the IRS still classifies it as life insurance. Okay, because if you overfund a policy more than their IRS guidelines, they consider it a modified endowment contract, and then you don't get the tax advantages. So I put in as much as possible for the least amount of life insurance as possible to build that cash accumulation up as high as possible. By the way, all of this minimizes commissions, just so you know, because if you have access to your capital, obviously, there's no commissions on it. So this is what I'm doing, is working on volume and minimizing the amount of commissions that are paid. That's what I love doing this, and I love helping people figure it out.
That's great. And I know we have a bunch of mutual friends and contacts through these mastermind groups, and I know you have a stellar reputation across the board from anyone I've talked to, and I think it's showing on this Zoom here. So what type of things are you investing in personally? With your borrowing from these policies?
Absolutely. So I do some private lending. It's one thing that I do. So if somebody has a loan that they need, a bridge loan or something like that, I try to get in first position if possible, but I will do private lending with it. That's, another friend of ours does that a lot as well. I do self-storage. So I like self-storage as an investment class. So I'm invested in self-storage facility. And also I do a lot in the energy space, because energy is one of the unique investments that can offset active income. So I invest in carbon capture technology and, just a bunch of alternative stuff. I invest a lot in ATM machines as well. And I do a lot of things that pay a residual income, and I can use that to pay back the loans that I make. So I'm not really personally, I'm not really into speculation. In other words, I don't like to take a lot of risks. I like to invest in something that I know that I'm going to earn a higher percentage return than I'm paying to the insurance company. So I think if you have a few minutes, it would be good, because I think like a banker, and I try to teach people how to do that. So the thing what banks do is they take money in on deposit, Jack, and then they find somebody to loan it out to. And they pay the money they take in on deposit, they pay that depositor just very low interest rate. And then they turn out and make a higher interest rate by lending out the money to a borrower, right? So what I do is think like that, because I have my own privatized bank that I've built up over the last 10 years. So I'm looking for interest rate arbitrage opportunities. So I'm looking for opportunities to make more in return than I'm spending in the interest cost, and therefore making money like banks do. And it's just a really powerful wealth building vehicle to be able to do that with.
Yeah, it's almost an infinite return. I've done a little bit of that even with just with my brokerage account from time to time.
Yep.
And I didn't, yeah, I don't think we talked about carbon capture and oil and gas. I've actually dabbled in that over the last few years as well, because I have a number of investors in my fund that have, high W-2 or high ordinary income. And so I started testing the waters, A, to diversify, but B, because I wanted to test it with my own money before potentially referring it to, people who are already investing on the real estate side, since I'm not an oil and gas guy, but was fortunate to get in. And the one time I'll say thank you, Putin, the one and only time, because
Yeah.
it has skyrocketed the prices. But
Yeah,
we can talk
it's
offline. I've got a group that's done very well for me, and I'd like to compare notes with you on the
sure.
groups that you've done well with.
I would love to talk about that, Jack. That sounds great. And yes, it is. The thing I like about it is that it's not this, hey, we're going to drill a well and we may or may not hit anything. It may come up as a dry well and you may just get a tax deduction. It's not that. I don't like that because, again, that tips off me into the speculation realm. And I prefer not to be in the, hit a jackpot or get nothing. I would rather just have a steady return. As long as it's more than I'm spending in interest, I'm happy.
Yeah, absolutely. And then the tax benefits are pretty amazing as well off of ordinary income for
They're
those who can take
astounding.
advantage of it. Yeah, 30
Yeah,
to
there's not.
40% less
Yeah.
of a check to write to the IRS the first year.
Yeah, there's nothing that quite works like that. Yeah. So it's been good. And I love alternative asset class investing. That's my specialty. That's what I love doing. And I don't really, what am I trying to say? I don't really advise people on that, what exactly to do, because I position people's money to be able to take advantage of it. And of course, if somebody wants to know what I'm doing, I'm happy to explain it, but I don't want to get into an advisory role on that because of the liability associated with it, if that makes sense.
Yeah, absolutely. I'm in the same boat there. I mean, we run a Reg D 506C fund, so if it's my own fund, certainly. But everything else, it's a mastermind. Happy
Yeah,
to compare
exactly.
notes, but yeah, I don't think I'm going to probably try to avoid at all costs getting a bunch of other letters at the end of my name and a bunch of compliance, and I'm sure you have
Right.
enough of that with the insurance side of things.
I do have a ton of compliance and a bunch of ongoing CE and all kinds of things I have to do just to maintain the insurance side. And I definitely would not look forward to doing that in the series licensing as well.
Yeah. And how many other masterminds are you in besides we're both members of Power Room, but I think you're in a
Yeah.
couple other ones, right?
So have been involved in another mastermind that was really real estate investors specific for a number of years. And I just recently decided to go more into the Power Room and just kind of go full throttle in that. Just because I really like the diversification of background in that particular one. So there's a couple of other ones that I've looked at, but in terms of like really actively involved, I think if you do too many masterminds, it's hard to get anything else done, to be honest with you. So yeah. I think I went 6 masterminds at least last year. So I'm going, okay, I got to put the brakes on that a little bit.
Yeah,
but
it's
it's
also hard to keep my
definitely
weight
good.
down. Yeah, for me, it's more of a diet and fitness thing. Although there's even fitness coaches at the mastermind too.
There are, man. You need to hook up with those guys at the starting line. They do a good job for people who are super actively traveling all the time. But yeah, so what I did, Jack, was when I go speak at investor events, I usually try to record them, and I do a really good job of just educating people on how it works. And then those videos that I make at the different events are available for people free of charge to watch and see if what I'm saying makes sense to them, right? And in order to get access to those videos, they're at my website, which is bulletproofwealth.info. And all you have to do is put in your name and email address at bulletproofwealth.info, and it will take you right to this video page where you can really get a good flavor of what's going on. And also, because it's a video, I know this is probably has a video component too, but it's difficult on a podcast to show a bunch of slides and get into numbers and show examples. But I do all of that on my video page. And then from there, if you like what you see and you want to talk to me personally about what it could do, you can just push a button inside of that video page to schedule a call with me. And then I go through your personal financial situation and show you what's possible. And even at that point, you don't have to move forward if it doesn't make sense. But I really try to educate people to help them to know exactly what's going on and how this can work for them.
Oh, that's great, and we'll certainly put that in the show notes as well with the link to your site and any other contact info and social media. Are you on most of the major social media platforms?
Yeah,
I'm
on LinkedIn and Facebook for sure. So I'll get you all of that. Yeah, definitely. I'm not Twitter. I don't really do Twitter, but I'm on
Gotcha.
LinkedIn and Facebook.
No TikTok yet?
No, TikTok. That's a kid's thing, man. I mean. I don't know. I probably shouldn't say anything like that. I know that all these things have their place and their different environment. But for most the people that I'm working with, Facebook and LinkedIn pretty much hits the majority.
That's great. Do you have, as we're getting close to wrapping up here, do you have any closing thoughts or tips or one piece of advice to people about your business?
Absolutely. So, it's just one of those things where I know that most people have never heard much about what I'm talking about at all. And the biggest thing that they can, that I've heard as a reaction is, hey, if this is so good, why hasn't somebody else told me about it? Or why have I never heard about it before? Well, there's a lot of stuff out there that you have to dig in order to find. It doesn't mean it doesn't work, and it doesn't mean it's not great. It just means that it's not mainstream. Okay, that's all it means. And really, the people that we're working with, probably both of us, Jack, are in the top 5% or so. Income earners. So they're not going to hear all of this mainstream. They're not going to hear about this stuff through normal mainstream channels. So just because you haven't heard about it before, don't just throw out the concept. Do a little bit of research on your own. And I would say one cautionary thing is do not go to YouTube and Google and in YouTube infinite banking. You're going to get every crazy person in the world out there with diverging views that's just going to confuse you. That's why I've created my own video content library to help kind of weed through all the noise and make it, easy to understand.
That's great. And I encourage everyone. I've known Tom personally for a while. And again, your reputation is stellar. And, we're very much on the same page, and both on the alternative investment side and just everything you're about on just crafting a product that's a perfect fit for active alternative investors. So
yep.
Thank you so much for taking the time to be on the show. I encourage everyone to go to your website at bulletproofwealth.com.
.info, bulletproofwealth.info. Yes.
Great. And we'll put it in the show notes. And, as the episode comes out, we'll certainly, send an email and make sure that all your info is available for our audience, because it's a very complimentary audience. So
awesome.
Thanks
That's
again.
Wonderful. Well, Jack, thank you for having me, man. I've really enjoyed being on your show, and I really appreciate the opportunity.
Absolutely. And I look forward to seeing you at an upcoming event. So thanks, everyone. I hope you enjoyed listening to this episode of the Alternative Investor Mastermind. Please follow us on your iTunes, Spotify, your podcast app of choice, or subscribe on YouTube. Thanks again, and we'll see you in the next episode.
Thank you.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there, all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at AlternativeInvestorMastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.